When it comes to sanctions, the US is the undisputed champion. They are the leaders of punishing the world. During President Biden's term, America placed over 5,000 names on the sanctions list. This, of course, includes countries like China and Russia. Sanctions that disrupt the flow of trade and even went all the way to freezing assets. However, something funny just happened in the Middle East. The tables have been turned and Iran just did something that few of us ever expected. Iran has confiscated an oil cargo that belonged to the US. In retaliation for the sanctions on Tehran, they have seized not just the ship but the oil cargo on the vessel itself. And it's not a small amount of crude, it's a very substantial amount. It shows that the US is losing control of the Middle East. American vessels sailing through the straits aren't safe because these tit for tat confiscations will likely continue. Iran is about to unload the crude worth $50 million, and at today's prices, that's well over 600,000 barrels of oil being confiscated away. And it came from a tanker chartered by Chevron, which was seized away last year. If we flash back to a year ago, the US likely did the same thing with sanctioned Iranian oil. In August last year, an oil tanker believed to hold the oil offloaded the cargo near Texas. Tehran vowed revenge and it looks like they have collected on it. So if you think the chaos in the Middle East is over, things are just ramping up. The Houthis have attacked a commercial vessel and for the first time ever, two civilians were taken out. The airstrikes on Yemen aren't stopping them, and this really begs the question, what else can the naval coalition do? The more ships the Houthis hit, the more this will cripple the Red Sea route. And the more this route gets crippled away, the greater the shortage of tankers to transport oil. And this will lead to higher oil prices across the world, especially when it comes to Europe. The amount of tankers being delivered today has collapsed. From VLCCs, which are the bigger ships, to Suezmax size, the number of tankers available is shrinking fast. We have gone from 75 vessels 2 years ago down to only 7 ships in 2024. That's how bad things have gotten. And because tankers need to sail around Africa, voyage time goes up as well as the price of oil. This is the reason why Brent crude is still staying high. Major economies in the world are already in recession. China is exporting less and America is consuming less as well. But it is this chaos in the Red Sea that's supporting prices up. If we look at the price of Brent, it's obvious how significant this Red Sea disruption is. Prices have gone from under $75 to $83 today, and this is a direct result of all the supply side shocks. Not only are the Saudis and Russians cutting production down, shipping the oil is now a big problem. It's a disaster. A higher crude price isn't good for the global economy. It causes inflation to stay high and delays rate cuts from the central banks, and it pushes us closer and closer towards a financial disaster. There are already a ton of dominoes on consumer spending to commercial real estate just waiting to fall over. Iran confiscating the US crude cargo also tells us how dangerous sanctions are. There will always be blowback effects for any action, and just like how Russia counter-confiscated Western assets, it isn't surprising that Iran countered US sanctions as well. And truth be told, the sanctions themselves aren't working very well. In a report from the New York Times, Iranian oil is still flowing strong. Tankers have moved at least $2.8 billion of crude from Iran to their end buyers, which is mostly China. The investigation found that the oil was transported on vessels using American insurance. The oil was transported about 27 tankers using liability insurance obtained from an American company. And this opens a very big question. Is this an oversight or are there clear limits to US sanctions? Has President Biden suddenly seen the light, seen the red line that he shouldn't really cross? Because this next chart shows us one fact that cutting away Iran's energy income isn't working. In fact, Iran is earning more money now than ever before. From Bloomberg, Iran defies US sanctions with surging exports of LPG gas. It's such a big rise that Iran is now the biggest LPG seller in the Middle East, which is literally insane. Iran is the biggest exporter of LPG, selling over 11 million tons last year, and is on track to go beyond 12 million in 2024 this year. In just 1 year, exports have gone up by almost 30%. That's how big the increase is. It's insane. They have overtaken the other heavyweights like Saudi Arabia, Qatar, and the UAE. And that's a huge deal because Iran is supposed to be under heavy sanctions from the US. So why is Iran still able to freely sell their oil and gas? Why isn't the US doing a brutal crackdown on their energy revenues? An obvious reason is not to escalate the Middle East conflict further. Israel's war isn't ending anytime soon and tensions are already very high. Now just imagine the US doing a blockade on Iranian vessels. Iran could shut down the entire Strait of Hormuz and doom the global economy. That's 20% of global oil demand taken away in an instant. It will be unthinkable. Inflation will hit double digits. It will soar to the moon. Trying to enforce sanctions on Iran will just explode the Middle East even further. But it goes beyond that. America knows who's the biggest buyer of Iranian oil. Blocking all their exports would mean waging an economic war on China. And this chart says it all. China is buying more than 90% of Iranian oil. The other 10% is split between Syria and Venezuela. If you sanction away every drop of Iranian oil, you are taking away 1 million barrels a day from China's energy supply. You'll be poking the dragon, you endanger China's national security and its economic attack on Chinese industries. Iranian oil makes up 10% of China's total crude imports. It's a very substantial amount that's being bought at a discount. And if you cut it off, input costs in China will go up. And that move could very well trigger a new trade war, even a physical war with Beijing. And that's why Iranian oil is still flowing. China, in a sense, is giving Iran financial cover. Now, that's just on the oil side. The boycotts in the Middle East are now hitting another US brand hard. A month ago, McDonald's admitted that the boycotts have hurt their business, and now something just big happened in Starbucks. Starbucks is laying off thousands of workers in the Middle East. Obviously, this isn't good for the local workers there. Their income is now gone and it's bad news for their families. But this tells you how sentiment on the ground is clearly against American brands. Store traffic has dropped off not just in the Middle East, but also in Southeast Asia as well. So the boycotts are starting to spread. And we have said this 1,000 times, until a ceasefire happens, US brands will continue to get clobbered in the region. Starbucks is already fighting with their workers' union back in the States. So this is going to add even more pressure on the brand. If we look at their stock price, it's literally gone nowhere. In fact, it is down by 11% over the past 12 months. Even strong earnings in December couldn't stop the stock price from crashing. Remember, this is during a period when the S&P 500 is heading higher and higher, going well above 5,000 points. Investors are uncertain about the future of the company, and that's why the share price is collapsing today. Retail brands like Starbucks are all about growth. You must open more stores in new locations to reach new customers. And if you don't, the brand will stagnate and eventually wither away. And with the Israel war still raging on and expansion in the Middle East, which is a growing market, is going to be very difficult. Franchisees sees the situation that it's going to be a tough sell to open more outlets to them. Starbucks doesn't have a presence in Israel, but the sentiment against US brands is just so strong that it doesn't really matter today. And this is not a good situation for local jobs. There are around 19,000 Starbucks employees in the Middle East across 2,000 stores. They have been in the region for over 20 years and now their footprint is at risk. Will the boycotts end? Not until a ceasefire happens, and that is proving to be very difficult today. The US is trying to tie the ceasefire together with the release of all hostages, but it's going to be a tough sell. What the world wants is an unconditional ceasefire because the fighting has gone too far. Hamas has also said no hostage exchange can be made. A ceasefire first and then we can release the hostages. It's the chicken and the egg problem. So more bad news for US brands. The boycotts won't be ending anytime soon and more layoffs might be coming. I think even years from now, any retail brand from America will have a very hard time trying to expand in the Middle East. But let's shift gears a bit and talk about the UK because the economy there is getting from bad to worse and Rishi Sunak is in panic mode. Inflation in the UK is still at 4%. That's double the 2% target and higher than most G7 nations. Combine that with interest rates that will stay higher for longer, you have a recipe for protracted stagnation. Looking at the UK's GDP growth, it's a total mess. It has been a downhill ride since Sunak pledged to save the British economy. GDP went from positive to flat to negative 0.3% last quarter. The UK recession is official and things are getting progressively worse. When an economy falls into recession, it will hit the consumer sooner or later. They will spend less and this will ultimately damage the bottom line of companies. UK store traffic slumps the most since the lockdowns in 2020. And yes, they are blaming the rain for the crash. Consumers stopped buying because it was raining too much. And this is next level cope. When I was in the UK a decade ago, it was raining almost every day, but people were buying stuff everywhere. I was there for a whole month. Leicester Square was packed with people and Harrods were packed to the brim. So I really don't buy this argument. To me, it's royal BS. And here's how bad the situation is. Footfall from shoppers have taken a nosedive. Retail visits have fallen the most throughout the entire UK. It is down by over 6%. High street stores in the city and town centers crashed the most by over 9%. This is a complete collapse in retail demand. It is not because of the weather. The trend is getting worse and worse because real wages have been hammered and people's budgets are getting destroyed. Retail sales collapsing is a canary in a coal mine. It signals a wave of layoffs is coming if this continues any further. Now, there have been a lot of policy mistakes by the British government. There's the support for Ukraine that's never ending. Over £12 billion have been given so far, and this makes the UK one of the biggest donors to Zelensky's government, just behind the US and Germany. But I want to touch a bit on Brexit as well. When the UK decided to pull out of the Eurozone, that started a chain of events that saw the UK lose a ton of benefits from the EU markets. Trade barriers are now higher than before, and investment in the UK has dropped. Brexit is estimated to cost the UK at least £100 billion a year. Considering UK's GDP is around £2.2 trillion, that 100 billion loss is equivalent to over 4% GDP growth. It makes all the difference between a growing economy and a recession. And the pain is still mounting even today. According to the OBR, UK is on track to take a 4% hit because of Brexit. Trade is also going to fall by 15% because of separation away from the single market. So we are seeing the manifestation of policies years ago starting to take effect today, and it'll take many years for the economy to recover. The OBS predicts that household disposable income will only recover to pre-lockdown levels by 2025 to 2027, and that will be when people have enough money to spend to revive the economy. So this is going to be another 1 to 3 years of financial pain at the very least. Until then, living standards will continue to stagnate while Sunak tries to dig London out of this mess. So here are the takeaways. The situation in the Middle East is getting from bad to worse. A ceasefire is still elusive 3 months into 2024 and it's still very far away. But until that comes, expect more surprises from Iran and attacks in the Red Sea. And the same goes with the boycotts. Things aren't going to end until something materially changes on the ground in Gaza. More US brands will get hit financially. And for the UK, I have serious doubts about their latest GDP forecast. The OBR projects a 0.8% growth in 2024, higher than expected. 2025 will grow by almost 2% as well, and these are very bullish forecasts. But with the global slowdown coming and consumers all collapsing, that's probably a very nice story to hear. It's a nice fairy tale, but not rooted in reality. But let me know what you think. Will the US strike back at Iran for the confiscation? And will they target Iranian oil next? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.